Harvey Norman is the cockroach of Aussie retail, and we mean that in the most respectful way possible. In a world where retailers are racing to digitize everything, Harvey Norman hasn't really changed much. Their website still looks like it's running on Windows XP. Their ads are still shouting at you through the TV like it's the loudest garage sale in history. And the stores are still big, bright, and proud. Like they were dropped straight from 1999. But it's still working. Despite all the tech disruption, despite younger generations roasting it online, Harvey Norman is still pulling in billions of dollars. Their stock price is steady, their footprint is massive, and whether you shop there or not, every Aussie knows the name. So, how is this unapologetically old school business still thriving in a world obsessed with disruption? Let's break it down, because Harvey Norman is doing something very few companies dare to do. It's refusing to modernize and still winning. Now, first things first, who's actually shopping at Harvey Norman these days? If you're Gen Z, you might assume no one, like it's some post-apocalyptic showroom for people buying landlines. But that couldn't be further from the truth. In fiscal year 2023, Harvey Norman pulled in nearly 9.5 billion Australian dollars in revenue across Australia, New Zealand, and a few overseas outposts. Their core customer base isn't online-only millennials looking for the fastest deal. It's homeowners, regional Aussies, tradies, older shoppers, people who want to walk into a store, see a lounge in person, open the fridge door, and have a good old-fashioned haggle with the sales guy. These are buyers who still value the tactile experience, who want to feel the fabric, test the mattress, and walk out with a receipt they can hold in their hand. And Harvey Norman has locked in that audience. They're not competing to be the flashiest, they're competing to be reliable. And this is where things get really interesting. Yes, Harvey Norman has an online store, technically speaking, but if you've ever used it, you'll know it's a bit of a throwback. No sleek mobile app, no tailored product suggestions, no cutting-edge e-commerce wizardry. Honestly, it feels like someone built the site during a lunch break in 2008 and never touched it again. But that's the thing. They're not trying to be Amazon, or Kogan, or JB Hi-Fi. Instead of pouring millions into tech upgrades and algorithmic customer journeys, Harvey Norman has stayed focused on what's always worked for them: in-person, high-margin sales. And underneath that old-school retail model is a structure that explains everything. Harvey Norman is a franchise empire. Each Harvey Norman store is run by a franchisee. That means each store is essentially a mini business, with its own owner, its own staff, and its own profits and losses. The head office doesn't run every store. It licenses out the name, the supply chain, the branding, and collects franchise fees in return. But here's where the model gets genius. Harvey Norman, the company, also owns the land. They're not just selling you a lounge, they're collecting rent from the store that sells it. As of 2023, their property portfolio was valued at over 3.6 billion Australian dollars. So even when retail sales dip, they're still making money off rent. When a franchisee bails, Harvey Norman still owns the building. And when inflation starts kicking up, it doesn't matter, they own the damn land. This combo of franchising and real estate is like a double-layered safety net. It makes Harvey Norman weirdly resilient, even when the retail world is going through chaos. And if we're talking Harvey Norman, we have to talk about the man behind the curtain, Gerry Harvey, co-founder, chairman, billionaire, media firestarter. At 85, Gerry's still running the show, and he's as opinionated as ever. He doesn't hold back, doesn't buy into the tech buzz, and he's not afraid to say things like, "We don't need to be online more. Our customers want to try the product in person." And here's the twist. For their customers, he's actually right. While other retailers are spending millions chasing digital transformation, Harvey Norman is leaning into the old school approach. And for their audience, that face-to-face service still wins. It's not about being first, it's about knowing who you're serving. Now, let's not pretend everything is perfect. Harvey Norman has had their fair share of public blow-ups. Remember the JobKeeper drama where during the pandemic, they took millions in government wage subsidies, then went on to post record profits. When asked if they'd pay it back, Gerry Harvey's response was basically, "Nah, we're good." The backlash was intense and the memes were relentless. Eventually, they did cough up some of the money, but not before dragging their feet and doubling down in interviews. The whole thing was not great PR. There were also customer service issues. Because stores are franchised, the experience can be a total roll of the dice. One store might be friendly and helpful, the next might make you feel like asking a question is a personal inconvenience. That inconsistency frustrates customers, and it's one of the risks of their model. And of course, the online side of things remains a glaring weakness. Less than 10% of their revenue comes from online sales. Compare that to JB Hi-Fi, which does almost 20% online, or Kogan, which is basically all online. You can really see the digital gap widening fast. So here's the million-dollar question. Why hasn't it tanked them? Well, it's because Harvey Norman has something the others don't. An unfair advantage in the real world. Let's break it down. Firstly, their product range is massive. They sell everything from TVs and laptops to couches, beds, dishwashers, even entire kitchen setups, the big ticket stuff you want to see and feel before you spend. Second, they dominate in regional areas. In small towns, Harvey Norman is often the only large format retailer around. That means they're literally the only option for people there. And third, they offer long-term interest-free payment deals that make giant purchases a lot more appealing to cost-conscious buyers. Want to pay off a $3,000 couch over 5 years? Harvey Norman is your place. All of this makes them surprisingly hard to compete with, even for faster, flashier rivals. Talking about their stock prices, Harvey Norman is one of the most quietly consistent dividend stocks on the ASX. Over the last 5 years, the share price has floated between $3.50 and $5.50. Investors love it for the dividend yield, which often sits over 6%. That makes it catnip for retirees, SMSF holders, and anyone who wants their portfolio to be the financial version of a comfy recliner. So, where does this all go? Does Harvey Norman become the next tech unicorn? Probably not. Will it one day launch a cutting-edge app, revamp its website, or start flirting with same-day delivery? Maybe, but it won't lead the charge. Because here's the truth. Harvey Norman doesn't need to be a tech leader. Its customers don't demand it. Its model doesn't rely on it. And as long as people still want to try the couch before they buy it, Harvey Norman's game plan still works. They're not chasing disruption, they're doubling down on what they know, and it's still successful. But what do you think? Let us know your thoughts in the comments section below and let's discuss. And if you enjoyed this story, give us a thumbs up, hit subscribe, and don't forget to ring that bell so you never miss out on more deep dives like this. Thank you guys so much for watching, and as always, stay curious.